Hello, welcome to this Crypto Professor analysis video on the three largest market capitalization cryptocurrencies. This is the first in a series of 3 videos on Bitcoin, Ethereum, and Ripple, respectively. Now, if you've been looking at markets over the past couple of weeks, you'll have noticed that all 3 of these cryptocurrencies have broken out effectively of long-term descending patterns, apart from Bitcoin, which has been on the ascent for the last 3 months or so. Ethereum has also climbed massively and then had a period of stagnation and also has appeared to break out, doing 35% in the last week. Ripple has also taken a lot of people by surprise and climbed 120% in the last 48 hours. This video is going to focus on Bitcoin because that is the predominant cryptocurrency, and its sentiment actually can have an effect on the overall cryptocurrency market as traders either buy into Bitcoin or sell out of Bitcoin into altcoins. And that is what I suspect is happening with Ripple, but we'll cover that in the 3rd video. Today I'm going to be focusing on Bitcoin in particular, and I'm going to be focusing on the technical analysis in the short term, as we are at $18,500 or $19,000, very close to the all-time high. And if we break this, we are literally going into uncharted territory, and things are going to get extremely interesting from a price perspective. We are presently just underneath the all-time high. If you traded on the basis of my previous video on Bitcoin, you'll have noticed that we did break the 14,500 resistance that I thought was going to be the case. I would have then taken a small profit off the table at around $16,500, and I would now have my sell limit somewhere in the region of 19,500, 19,600 for that all-time high. I would not, however, take everything off the table, because if we do break that all-time high, things could get very, very interesting very, very quickly. And if we see 20,000 or 21,000, then chances are we're going to continue up to 23, 24,000 over the long term. Now, I want to focus on what the news are saying presently about Bitcoin. Back in 2017, we had the news media reporting on the average retail investor, the average Joe, buying a load of Bitcoin and becoming a millionaire almost overnight. And the rate of pace of the market back in 2017 was very, very much more impulsive than this has been. We've seen a rally in Bitcoin of around about $1,000 a week since September. And that has been slow and steady. And the reason that has been slow and steady is that institutions are buying as opposed to the average retail trader. Now, retail traders obviously are still a part of the market, but they don't make up the majority of the market. We have had huge investments by companies like PayPal and Square, most recently, who've been grabbing the headlines. Grayscale, it's an investment company, have purchased over 500,000 Bitcoin so far in their attempts to create a monopoly within the market in terms of investments. And we've also had MicroStrategy buying $400 million plus of Bitcoin. So these institutions have a fundamentally different view of the market than your average retail trader who's only looking to make maybe a short-term profit over a couple of days to a week. These institutions are buying for the long haul. They're buying for years as opposed to weeks or even months. And they're also not afraid if the price dips by 20, 30, 40%. In fact, they'll probably buy more. So the sentiment has definitely changed for Bitcoin from being an asset that is volatile for the sake of being volatile to volatile because people are investing in it and looking for the long-term future. So we have PayPal and Square's Cash App that have scooped up 100% of newly minted Bitcoins. That has had an effect on the price in that it is causing the newly minted Bitcoins to be bought up almost immediately, which is a problem for liquidity if you're looking to buy new Bitcoin as opposed to buying Bitcoin that already exists. Then we've got the rate of pace of change. Bitcoin is already outperforming the halvening that sparked 20k all-time high. That's referencing the fact that we have started a bullish trend that is very vigorous, but still has a level of sentiment about it. You know, people can still understand why it's moving up as opposed to it being parabolic extremely quickly and then selling off dramatically in a pump and dump. We've also got people using Bitcoin for what I suppose was Satoshi Nakamoto's genuine ideal of how it was used as actual currency. And we can see that in the poker site that's bought $100 million worth of Bitcoin in order to pay its players. So players are playing in BTC, playing poker in BTC, and are collecting their rewards in BTC. We've also had previous bears of, or critics of, the cryptocurrency world. Ray Dalio in particular has admitted that he may be wrong about Bitcoin. However, he is still concerned about the governmental and institutional landscape. But I think that if we look at the general institutional landscape over the past couple of months, in particular in the US, we've got Joe Biden, who I believe, I don't know for certain, but I believe is a lot more crypto friendly. In actual fact, one of his largest donors was behind a major cryptocurrency project. Then we have Donald Trump, who I believe is actually quite anti-crypto. So we've got him moving out, allegedly. The US obviously has been a point of contention over the past couple of weeks as the political landscape has been very dicey. However, I think that the president-elect is going to be a lot more crypto-friendly or towards these crypto assets. So the regulatory landscape in the US is unlikely to cause as much concern. And also the fact that these large institutions, these large companies are now looking for Bitcoin to be bullish, that's going to obviously ensure that any regulation that is passed is crypto-friendly, or as crypto-friendly as it can be. This side of the pond in the UK, we have actually had the FCA come out and say they are now regulating cryptocurrency brokerages and entities from January. Every single company that looks after or manages crypto assets for third party will have to be registered with the Financial Conduct Authority. We've also had the FCA ban derivatives or contracts for difference, which are illegal in the States anyway and have been for years, on Bitcoin, Ethereum, Ripple, etc., due to risk, basically due to their volatility. So for the first time ever, anyone who's purchasing Bitcoin in the UK or a Bitcoin based product or a cryptocurrency product has to actually buy the underlying asset. They can't trade contract for difference, or they won't be able to trade rather, in January when that law kicks in. As for now, people who are trading have been warned that they, can't trade long term on those derivatives, and that may be having an effect on the price as traders buy up the genuine asset as opposed to just trading it on a contract for difference through a spread betting or CFD platform. The reason why I think it's institutional traders as opposed to retail traders basically comes back to the Google Trends data, and this is what you can see here. This goes back all the way to 2015, and we can see this spike in 2017. That is the previous crypto market bull run, where Bitcoin hit almost $20,000 for the first time. Notice Ethereum down here appears for the first time, and Ripple goes all the way back, obviously, before it being a longer term project. But the red line is Ethereum and the yellow line is Ripple. So we can see here that that is actually a point of concern, that these assets are very much less than the Bitcoin asset. But look where Bitcoin is presently. It's only around about 20% of where it was back in 2017. So people aren't necessarily purchasing Bitcoin because they're looking for it. They're either holding it and refusing to sell, and they've been in the market for a long time, or there are new investors coming in dribs and drabs, but the majority of volume is coming from institutional investors who are not searching for Bitcoin. They're just happening to know a broker or know a over-the-counter trader who is available to offer them huge volume in this market. Now, if we look on a slightly shorter time frame, over the last 30 days, we can see that the spike in Ripple has actually been very small in comparison to the price movement of over 120%. But Bitcoin is effectively at its monthly high. And in fact, if we look over the space of 12 months, it's actually at its yearly high at present. So the interest in Bitcoin is high, but it's not as high as it was back in 2017. I also want to look at something different. This is price data now, but this is the market capitalization of Bitcoin. This goes all the way back to 2016 when Bitcoin wasn't really worth any much, and it was only worth around about 10 billion so as an asset. Then we had this price spike all the way up to $350 billion in 2017, and then a sell-off ever since. And now we are back at the $350 billion region. Whether we break this or not, I think we will, but I think we might have a slight pullback before we do that, or at least we'll have a breakthrough and then a recapitulation to retest this support level, because this is the fundamental support of the asset breaking its new all-time high in terms of adoption and volume. And it's really, really crucial that if we do break this, we continue on to higher realms, because that will show institutions that they're getting value for their asset, basically. And the institutional adoption will continue long term if we break this with some level of conviction. At the moment, we are looking a little bit tentative. We are getting price bouncing off this blue line, as I'll indicate and demonstrate in a bit towards the end of this video. This may be the reflection of retail traders being reluctant to purchase at this high price, because they've heard stories about people who bought at $19,000 previously and sat on it for the entire duration of 2017, 2018, 2019, etc. So the people around here who are looking to buy Bitcoin are either very brave, or they fundamentally believe that we're going to break through this. And institutions would be in the latter camp. They would believe we're going to break through this resistance level and climb higher. MACD here on the market capitalization, nice and strong, breaking away, no sign of a turnaround here. But if we look on a 4-hour chart, an interesting pattern emerges. We've got a slight sell-off and there is bearish divergence on this. So that tells me that there are people who are taking some level of profit off the table at this price, and therefore they expect to not break through this. That bearish divergence is on a 4-hour chart, so it's not as reliable as a longer term chart like a day or a week, but we remain to be seeing that volume follow through on a longer term time frame. So I'm going to keep an eye on this to see whether this develops into something that can be seen on the day chart. You notice we are slightly turning over there. If those cross over those blue and red lines and start to descend, then this resistance level will almost certainly hold. Let's look a little bit more in depth, once again still on the market capitalization. This is the ADX, or trend indicator. You'll notice that we're very, very strong at the moment, around 57, 50 being extremely strong, and the green is above the red, therefore indicating bullishness. So on a day chart, in terms of trend strength, we are nice and strong, not as strong as we previously were. Notice around about the 5th of November or so, we have tailed off a little bit, so there is a reluctance here for people to enter the market afresh, but we're still extremely strong and extremely bullish. Once again though, looking at the 4-hour chart, we have flipped over. We are now bearish. Admittedly, the trend is almost non-existent at around about 15 or so, but we have flipped over onto bearish territory for the 4-hour. So it may be just the fact that people are preparing themselves for the market to break out to the upside. Some people are banking small profits, which is appropriate, I would think, at this level. But we need to see whether that develops into something stronger over the course of the next couple of days. Notice the ADX here peaked once again here and then sold off, peaked again, and then we saw a switching of the bullishness to bearishness as we go along. So the 4-hour can be a reliable indicator, but I would look for something else as well to actually indicate whether or not we're going to respect that resistance level or whether we're likely to break through it. Looking at the RSI, once again, we're really, really overbought here. The RSI is giving us a clear indication to take some profit off the table on a week chart. Nice and strong. On a day chart, similar story. We've got nice and overbought here around 76 or so, and we've been there for quite a while. In fact, we've been there since the 20th of October. So RSI, you always have to kind of take with a pinch of salt with cryptocurrencies, because it would have told you to sell around about the $233 billion mark on here, and we'll get to a price action data a little bit later for an actual specific price of what that would be. But we've obviously continued our ascent even though the RSI hasn't really done anything. So let's look on a 4-hour. Okay, so still we got this divergence here. We're selling off slightly. We've still got room to maneuver to break to the upside. So this is either going to continue further down, in which case we'll reject the resistance level at $19,000, or we will continue through it with much more momentum. For example, if we had a new institution come on board and buy a lot of BTC. So looking now at our trend line, this is our trend line support that we've had since March, and we've been touching on that occasionally, but generally being above it. We're now very much above it, and theoretically we come down to test the $15,000 region or the $13,000 region on a day chart if we did see some form of sell-off. Again, I don't think that that's particularly likely. I think we are at least going to have some form of breach of the long-term resistance before that actually happens. And then once again, the price data, we were looking at the 4-hour chart. We peaked at around this price, but then we had divergence here. So the RSI has tailed off, but the price has largely remained the same, if not slightly increased. So let's look at that price action. So the RSI would have told us at 80 to sell around the $12,000 mark. So you would have really truncated your profitability there and not been able to capture the majority of this movement that we've had since September. Another reason why you should always combine your trading tools in order to get a clearer picture rather than just using any one particular technical analysis tool. So let's go back to this. Right, let's focus now very much in depth on what the price is doing right here, right now. You'll notice that we peaked at around about 19,000, just under $19,000 back on the 21st of November. Since then, we've been in this wedge, and we've been wedging nicely between these two regions. The moving averages, we have kind of coalesced a little bit and are actually starting to turn over. So that might indicate that this blue resistance line is going to hold, and in turn, the blue resistance line that we saw going back 3 years is also going to hold. This red line is the bullish indicator, and we've been bouncing off this nicely. Now, technical analysis people will tell you that the more touches a line has, the more strength that it has as well. But I think that because we've actually come down here and tested this and even broke below it slightly and are now kind of oscillating above it, we may see a break of this red line to the downside rather than see an ascent to the upside. But we will know probably within the next 24 to 48 hours, so by the time this video goes out, where the loyalty kind of lies with this line. I would expect, rather than to have a follow through of bullishness, looking at these two moving averages, although this is a 1-hour chart, that we would have a break to the downside at least, potentially dropping to a level like 18,000 perhaps in the best scenario, maybe even down to 17,000 if we really had something untoward in terms of fundamental changes. But I think a retest of this EMA here would be the most appropriate point to start to rebuy for people who've taken profits over the past 24 to 48 hours to retest this blue line of resistance if we are going to break the intra-year resistance level at $19,000. Until we see $19,000, I think the price is going to capitulate, and as soon as we see over $19,000, we're going to jump probably very, very quickly towards 20,000. I would reckon we'd do it in a few hours or so. So there is a long entry using leverage or margin at $19,000 if we do see it, because I think as soon as we see 19,000, people will jump on the bandwagon and they will want to secure as much Bitcoin as they possibly can. So once again, those moving averages on a 4-hour are around about 17,000 and around about 15,000 here. We've got that divergence on the MACD indicating that we are having some form of sell-off and some form of profit taking, and it's even looking bearish on the 1 hour, although we are having a crossover here of sorts at the moment. So we are at the bottom of that trend channel that I mentioned. So that's probably what that is in terms of the cross there. Looking on a day chart, we've still got a lot of maneuverability if we were to have some form of sell-off down to 15,000, so that 15,000 support, and then even back to 12 if things really did lose interest for institutions and people started capturing their profits left, right, and center. However, as I say at the moment, the news media, the sentiment in the market, the retail investors, they're all waiting for this $20,000 magic figure. What happens when we get there? Perhaps a lot of short sellers enter the market or institutions enter the market and the price comes down hugely, or we wait and see what the new all-time high price is for Bitcoin, which could be between $20,000 and $25,000. I hope you've enjoyed this video. If you have any recommendations for me or anything you'd like me to actually add or to look at on your behalf, please leave a comment or a suggestion below. Otherwise, happy trading. If you've enjoyed this video and would like to get $25 of CRO completely for free, please sign up to Crypto.com using our referral link in the description on this video. The Crypto Professor likes feedback. If you've enjoyed this video, please don't forget to like it. If you'd like more of the same, please don't forget to subscribe. Or if you have questions, please post them in the comments and I'll endeavour to answer them for you. Thanks for watching.